Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. Recession is front and center. People are concerned. I'm going to give you the data that you need to know. It's important that we look at all of this and understand where we could put our money to beat inflation. I'm going to show you one that is technically obscure for many people, but you gotta stay into the end. Let's begin by taking a look at economic pessimism growing in the US. And this is a Gallup poll, but you see it all around. I mean, the University of Michigan did the same thing I talked about before, and here we have it. You can look at this, and why is this the case? It's inflation. Everything is going up in price. You have seen that yourself. But essentially, since the beginning of 2020, despite the bounce that we experienced, this has been heading downward. It shouldn't be a surprise to anybody, okay? They can temporarily stave off this, but you cannot simply continue to provide stimulus forever and ever more. Look at what happens to somebody at the end of the night. They have the espresso. It gives them a boost, but you can't persist off of that. How many espressos can you have? Toyota misses April global production target due to things that have been happening over the last couple of years. You got the parts shortage. There's so many things with the supply chain that's wrong. You got labor problems. I mean, there are all these different things that have been adding up, but this is the biggest car maker in the entire world. Okay, so you know that they're going to have access to things that you and I don't have, and yet still there's this inflation that's been happening each and every place you look, you see that. But we have to look to real estate to be this real extreme, to be honest with you. And you look at it broken down by these different areas: Tampa, Phoenix, Miami, and then Dallas, just beyond that. These are the places which have been so attractive. You see that especially with South Florida, but Florida in general, actually, where people have been leaving areas like New York and California, and they've been going to these places like Phoenix and Tampa, Miami, and so on. Of course, there are many other reasons for that, but price happens to be one. It's more attractive price, but you look at the job situation as a real estate investor, I can understand why people are buying up in an area like Miami, even compared to New York or California. Miami was still an expensive place, but you see what's happening with the appreciation right now. Speaking of real estate, the Hamptons summer rental market is facing an unexpected chill as inventory piles up and prices come down. Uh-oh, we've got an issue because the people in the Hamptons are not going to be, the average Joes. No, not at all. These are people with money. These are people who were buying them all up throughout this period, and then suddenly they're holding back, just like the big businesses are holding back, just like we see the general sentiment. We are watching this now at the fringe of a market. That's what I want to stop for just 1 second. Okay, let's highlight this for a moment here. To understand fundamentally what happens, we don't need to always repeat the same things over and over and over again. No. We have to understand what happens at the fringe. The fringe is going to give us the information that we need to know in the center, if that makes any sense. So think about where you are and think about like a circle around you. The information at the fringe is going to ultimately build our knowledge base. If we're always just, the same, we're never going to see what's beyond our bubble. Does that make sense? I hope it does, okay? Look at this. Charts for you. Eurostat, Eurozone, all items, year over year estimate of this is basically inflation, okay, in the Eurozone. It is at the highest that we've seen. This chart goes back all the way to 2001. Never seen anything like it before. So the expectation is that the ECB will be increasing interest rates at 0.25%, which for the Eurozone is a big jump. So we'll see. Inflation watch. Consumer price growth is accelerating across the euro area, and you see this particularly, in Germany. You don't get that, right? Germany didn't have that previously. I mean, you may see that in other areas, but doesn't seem to be the case quite as much for Italy, at least when we compare that to Germany, to Austria, to Spain, Portugal, and so on. Here we have it, driving inflation. Euro area consumer prices rose more than anticipated. But you see one very strong outlier here, and that is energy prices. But you can't say, well, see, it's volatile. This is why we got to cross it off. No, energy is affecting everybody. Absolutely. But you might say, well, I ride my bike to work. That's fine. Absolutely. And two things. Your personal circumstances, yeah, you might ride your bike to work and you don't use, a vehicle and, you've got solar panels on your house or whatever. But you've got to realize something here. You're getting food from other places, right? That food is going to rely on energy. All these different things that are not direct, but that are coming towards you. Okay, I don't want to go into that. I think you know what I'm talking about. Treasury Secretary, my favorite and yours, actually just mine, Janet Yellen, concedes that she was wrong on the path that inflation would take. My goodness. You gotta give her credit for admitting that she was wrong. The only problem here is that it's way after the fact. I was talking about this, and I know you were too, but here we are, well after the fact that, hey, inflation was worse than expected. Why is my ice cream shrinking? Yes, that's right. This Bloomberg article literally said, why is my ice cream shrinking? Inflation by stealth. What are they talking about here in this article? They break it down and it's shrinkflation. Okay. They get into many examples of it and they list quite a few. Which brands are the worst offenders? Nestle, Mondelez, Cadbury. What else we got here? I mean, others from around the world. They're mentioning Pepsi, Domino's, Doritos, all that stuff, okay? So what's happening here? They shrink the packages down. You got a drink. It used to be, let's just say 12 ounces. Now it's 10 ounces. Some people say, well, that's good because that's all junk food or whatever. That's not the point. The point here is that these companies are going ahead and doing a different strategy than what we were used to previously, okay? I mean, this has kind of always been going on, but it's really to an accelerated degree right now today. Plot twist. Movie theaters fear popcorn shortfall will be a spoiler. That's right. This popcorn shortage, I don't even want to get into that. Everything's in a shortage today, except for lies. Except for lies. Anyway. Consumers squeezed even more between Russian oil ban and Chinese reboot. Europe expected to scour other markets for replacement supply. And that's something I talked about all the time. If Ukraine goes offline for one thing or another, maybe it's wheat, maybe it's whatever. If Ukraine's offline, well, now who were they giving wheat to? Iran. Maybe they were dealing with China. Maybe they're dealing with whoever. Okay, now these countries have to go out and say, okay, well, we still need our wheat, but who do we get it from? Oh, you're already dealing with that country or that company or what have you? Okay, well, we need to buy some of that. Oh, well, now supply and demand fundamentals, prices are going to be jacked up. You see, even if it wasn't, and not just for that one country that suddenly lost the supply, it's going to affect the whole world. Okay, here we go. This is, anyway, check it out. Talking about recession. U.S. economy shrank in the first quarter of 2022. Do you think this means that we're likely to go into a recession? When you look at the GDP number, and this is interesting, by the way, the really important point is the reason that it shrank because of net imports, which were negative, which means we're importing a lot of goods from abroad. That's because consumer and corporate demand is robust. I would disagree, but anyway, this is a quote. So there's a silver lining in the reading of that GDP number. The bottom line is the recession is inevitable. It's a matter of when. And when you look at what markets are pricing here, they're pricing it fairly soon. So take that into account. Now, one thing I thought was interesting when you look at the markets, think about what the markets are doing. I showed you the economic aspects, the inflation, everything. And now we look at the markets. See this right here. Equity calls. Okay, calls are a bet that the market will rise. Okay, so look at what happens here. You could see there was a spike in what happened there through 2021 into 2022. However, recently, this recent rally, we are still seeing calls, not being bid up this way. There's not that much. And in fact, other data has shown us that liquidity has declined considerably. Even though we were already really low, liquidity has declined even further. Very unusual. You stayed until basically the end of the video, and now I wanted to show you what Bloomberg is highlighting as one of the most popular options this year in the usually sleepy world of cash-like products is the Series 1 or Series I savings bond from the US Treasury. Now, I'm not necessarily suggesting to you that you should get this. I'm just like a typical investor standpoint. Okay, where they got their money right now? Is it just in the bank? Is it in a stock? Is it in bonds? What is it? Well, the Treasury Department sets the variable rate for these products at the beginning of May and November each year, with the rate rising or falling based on inflation. Currently, it's at 9.62%, which outpaces the latest inflation reading at 8.3%. Now, obviously, if you look at real inflation, okay, different story, but at least think about that. You're getting basically 10% on your money. There are limitations to these. Okay, that's fine. But I think it's important for someone to know that this is an option. Okay, this could be a great option for somebody who wants to put away some cash for a set period of time and earn a great return. So you're not going to be, right here, $10,000 limit, but still. Anyway, I just thought I would bring that to you. There's other reasons why, this is good or bad, or that's not the point. And then last but not least, I wanted to show you this, how Ford's electric pickup can power your house for 10 days. Really interesting article that I wanted to show you here. If you want, check it out in the link in the description. But I just thought this was interesting for people who are thinking, in a different way, in a different light and preparation and all that. But I know some people are not interested in that at all. So I just wanted to include it here with that title. If you're interested, check it out. Look, did you appreciate this information? Simply hit that thumbs up button. And also don't forget to follow. Hit that subscribe button for more truth. When you do, you're going to get the new details every single day, okay? I'm bringing out this stuff literally for 11 years now. And day after day after day, no political nonsense, no bias, no jargon, none of that stuff. I bring you the details you need to know. Simply hit that thumbs up to support the channel. Follow me on Instagram, follow me on TikTok, follow me on Twitter. Every single day posting multiple things that I perhaps don't even cover here on this channel. I'm giving you the good stuff. So you can follow me at The Money GPS. I'll see you on the next one. Take care.